this video, we're breaking down the tax differences between being a sole proprietor, partnership, LLC, and S corporation, all in plain English with real world context so you actually understand what matters. What's up, everyone? My name is Eric Hunsaker, and if you're running a small business, you've probably had one of these thoughts. How much am I really going to owe in taxes? Does it matter if I'm a sole proprietor or an LLC? Should I switch to an S Corp? If so, you're not alone. Most business owners figure this stuff out as they go. And taxes, yeah, they're confusing, and they don't have to stay that way. So let's break it all down. The starting point, being an employee versus business owner. Now, before we jump into the different tax structures, let's rewind a bit. So remember when you had a job and you got a regular paycheck? Well, your employer automatically took out taxes before that paycheck even hit your account. Federal income tax, Social Security, Medicare, and maybe state tax, depending on where you live. Behind the scenes, your employer held on to that money and sent it off to the IRS on your behalf. You didn't have to think much about it. Now that you're running your own business, things have changed. No one's withholding taxes for you. That means it's your responsibility to figure out how much you owe and pay the IRS yourself, typically every quarter. If you don't, you risk penalties and a big tax bill come April. But how much do you owe? And does your business structure change that? Let's break it down. Sole proprietorship taxes, or single member LLCs. When you're a sole proprietor, you don't file any special paperwork with your state to create a business entity. Maybe you just started freelancing or launched a side hustle. Even if you formed an LLC with just yourself, the IRS still treats you the same way, as a sole proprietor by default. Let's say you earned $125,000 in revenue last year and had $25,000 in expenses. That leaves you with $100,000 in business profit. As a sole proprietor, you pay two main types of taxes. Self-employment taxes, and this includes Social Security and Medicare, federal income tax, and here's how that shakes out. You pay 12.4% in Social Security tax and 2.9% in Medicare tax on your entire profit. So $100,000, that's roughly $15,300. Then you'll owe federal income tax based on your tax bracket. For someone single making $100,000, that could be around $10,300 depending on deductions and credits. And don't forget state income taxes if you live in a state that has them. Some states have a flat rate like 5%, and others use a sliding scale just like the federal system. The big thing to know here is that you're paying self-employment taxes on your full profit. That's a key difference that we'll come back to. S corporation taxes, and why people talk about them so much. Now let's say you're taxed as an S corporation. You either created an LLC or a corporation and filed IRS Form 2553 to elect S Corp status. This is where things get way more strategic. Instead of paying self-employment taxes on your full profit, you split that profit into two parts. Your salary, which is reasonable compensation, your distribution, the rest of your profit. So if your business made $100,000 in profit, you might pay yourself a salary of $40,000 and take the remaining $60,000 as a distribution. Now, why does this matter? Because you only pay Social Security and Medicare taxes on your salary, not on the full $100K. That means that instead of paying 15.3% on all $100K like you did as a sole proprietor, you're only paying it on $40,000, and that's big savings. Here's how that could look. Social Security tax on $40,000 is $2,480 from you plus $2,480 from your S Corp, which you also own. Medicare tax, 1.45% each from you and your business. Altogether, your Social Security and Medicare tax might come out to around $6,100, which is way less than $15,300 you'd pay as a sole proprietor. But remember, you still pay federal and state income taxes on the full profit, even the part you take as a distribution. So there's no getting out of that piece. But saving thousands on self-employment taxes, that's why people love the S Corp. Partnership taxes or multi-member LLCs. Partnerships are kind of like sole proprietors, just with multiple people involved. That could be two freelancers teaming up or a multi-member LLC by default. Let's use the same numbers. Your business made $100,000 in profit, and there are two partners who split things evenly. Each partner gets $50,000 of income. Now, here's the key point. Each partner pays self-employment taxes just like a sole proprietor does. That means 12.4% for Social Security, so $6,200, 2.9% for Medicare, $1,450. Total self-employment taxes equal $7,650 each. Federal and state income tax still apply based on each partner's tax bracket and residence. Partnerships don't offer the self-employment tax savings that S Corps do, but they're simpler to run and they don't require you to file for payroll or pay yourself a salary. A quick look at the numbers. Here's a rough comparison of how much you might owe in total taxes for each structure, assuming $100,000 in profit. Sole proprietor self-employment tax about $15,300, federal income tax about $10,300 for a total of $25,600 plus state taxes. S Corp salary equals $40K, so payroll tax tax is Social Security and Medicare, about $6,100. Federal income tax, about $10,600. Slightly higher due to some payroll income. Total, about $16,700 plus state taxes. Partnership, 50-50. Self-employment tax, about $7,650 per partner. Federal income tax is about $3,000 to $6,000 per partner. Total, about $10,500 to $13,500 per partner. These are rough estimates, but the key takeaway is this. S Corps usually offer the most savings if you're earning a healthy profit and can pay yourself a reasonable salary. Now, there's another piece of the puzzle worth knowing, the qualified business income deduction, or QBI. If you're a sole proprietor, partnership, or S Corp, not a C Corp, you might qualify for a 20% deduction on your business income. That's why in many examples above, we didn't just plug in $100,000 as your taxable income. We used $80,000. That's because 20% of $100,000 is $20,000, and you're only taxed on the remaining $80,000. So even if your structure doesn't lower self-employment taxes, this deduction could still save you thousands in federal income tax. How to pay your taxes. You don't want to get hit with late fees or interest, so let's talk about how to pay what you owe. If you're a sole proprietor partnership, you can go to IRS Direct Pay. You can pay both your self-employment tax and federal income tax there. You want to pay quarterly to avoid penalties. Here are the due dates. Q1, April 15, Q2, June 15th, Q3, September 15th, and Q4, January 15th of the following year. If you're an S corporation, you'll need to run payroll and use EFTPS, which is Electronic Federal Tax Payment System. This is where the S Corp pays its share of payroll taxes and sends in income tax withheld from your paycheck. It takes a couple of weeks to register, so plan ahead. Honestly, if you're an S Corp, your best bet is to hire a payroll company. This stuff gets messy fast. Let them handle the forms and deposits. You focus on running your business. For state taxes, every state is different. Just go to your state's Department of Revenue website and look up how to pay estimated taxes. Some states don't have income tax at all, which is great. Others will want you to pay quarterly, just like the IRS. So what should you choose? There's no one-size-fits-all answer, but here are some general rules. Sole proprietorship. This is simple, easy to start, no payroll, but high self-employment taxes. S Corp. More paperwork, but can save thousands if you earn good profit. Partnership. Good for 2 or more people working together, but same tax treatment as sole proprietorship. The best move? Talk to a pro. You can file yourself, but if you want peace of mind and to avoid IRS headaches, work with a service that knows what they're doing. That's where services like LegalZoom and Northwest Registered Agent come in. Whether you're forming your first LLC or switching to an S Corp, they've got your back. And they make it easy too. Now, if you want to get started with either of those, we'll have links for you down in the description below. Maybe you're thinking of starting an LLC and you want to use LegalZoom. Just click the LegalZoom link down in the description, which will bring you to this page right here. And if you scroll down, you can go ahead and see that there are several different plans to choose from. So if you want to get started with LegalZoom or Northwest Registered Agent, we'll have links for you down in the description below. So taxes aren't fun, but understanding your structure, planning ahead, and paying on time will save you money and stress. Take the time to run your numbers. Use a free tax calculator online. Get help when you need it, and remember that your business taxes don't have to be a mystery. Now, if you got value from this video, then consider checking out other videos or resources on the channel. There's always more to learn, but at least now you've got a solid foundation. And if you want to get started with any of the products that we talked about today, you'll find links for them down in the description below. These are affiliate links, which means we earn a small commission when you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create videos just like this. So if you end up using them, we thank you so much in advance. But other than that, thank you so much for watching, and we'll see you here in the next video.